Alright, this is going to be a very quick video blog talking about the close trades for the last week of December on the S&P Crusher V2. If you've seen the other video blogs, you notice the other packages as well. However, those are just subsets of the S&P Crusher. So we decided to make the videos a little bit faster that we would just talk about the S&P Crusher V2. So if you're trading other algorithms, then those are subsets of the Crusher. So when we talk about each strategy, you'll be able to know which strategy corresponds to the package you're trading. But the S&P Crusher V2 and then also the Swing Trader are the two primary algorithm packages that we offer. And so with that, I'll just quickly go into the disclaimer. So as we've talked about numerous times, trading futures and options involves substantial risk of loss and is not appropriate for all investors. I'd also like to just say that we offer our algorithms based on a computerized system, so we're what's called a third-party developer. We do not offer any personalized advice, so we just offer the trading systems, and we claim the self-executing exemption from registration as a CTA. Also, keep in mind that trading futures has large potential for reward, but also for risk of loss as well. So it really isn't for everyone. But if you're a trader looking for an algorithmic trading system, then we think we have some really good packages here, and I'll keep talking about our performance. Also, the past performance is not indicative of future performance. So in this video, we'll be talking about the performance of the Crusher, and we'll be talking about live trades that we placed. So just always keep in mind that past performance is not indicative of future performance. Alright, so again, you'll see a slightly different format from the other video blogs, just in the way we present the data. But again, these are the closed trades that we placed for the week of the period covered. Overall, I'm not going to lie, it was not a good week for us. We took hits on our in particular on our swing trade algorithm, the ES, and also on the Iron Condor on the put side because of the market sell-off. So we'll be talking about those trades though, and hopefully it'll help for those of you that are trading it now and are looking at it. You'll see a good picture of what a rough week for us might look like. We don't only highlight the good, we also talk about the bad, and we own up to it. So again, I'm not going to lie, this was a bit of a rough week for us. But with that, let me go to the charts and we can kind of talk about some of the trades. So the first trade that we had was actually a winning trade. So this algorithm up here is the swing trade ES. We've also called it the bullfire in the past, but it places swing trades on the S&P minis. And we came into the week long the S&P from right here, and it was actually a really good trade because we got out when the market spiked, and then it sold off on the 27th, and so we took profits on that trade. And then when the market closed, we sold calls at the 22.75 strike price. Those are the covered calls that we trade, and then we got long the S&P again. But this first trade was really good, so that was a good start to the week. And the calls that we sold turned out to be a really good trade as well. So if we go back to the PowerPoint, you'll see this trade right here is the one that we had a gain of about $113. And then here's the covered call right here that we had a gain of $188 on it. But unfortunately, the bullfire kept getting back in, and so we took a pretty big stop right here on the 28th, and then another stop on the 30th. So we took two losses back to back on this trade, and that's really the big reason why we got hit kind of hard. So those were two losses on that. The 10-year note algorithm, which is the one that typically does good when the market goes lower, was not in a trade at this point. And so as you can see, the S&P was going lower, the 10-year was rallying, but it still hadn't stabilized enough to where we would get back in. The other trade that we took some losses on was the Iron Condor. And again, the Iron Condor is designed to do well when the market goes sideways. If the market goes lower like it did, if it has a big sell-off, then it can take a hit. just keep in mind we're not always in this trade. So if the market were to keep going lower here, then more than likely this iron condor would not trigger again the next week. But in this case, we had the short call position was actually profitable. We sold the calls at 22.75 and the market closed at around 22.35. So the call side of this iron condor was profitable, but the put side was not. So we sold the 22.55 puts. The market closed at 22.35, so it's about a 20-point loss from our strike price. Let me go back to this though, and I'll kind of walk you through the iron condor. So this first one is the call. So we sold the 22.75 strike, very similar to the covered call, and it was also a profit of 188. Although we do buy protection on the call, so that's where this minus $13 comes in. But kind of the raw profit on that side of the trade was 188. Once you do the actual total, which is what this is here, and all the totals that we show on the website incorporate the cost of the protection, slippage, and commission. So we do include all that, but we want to show just the raw PL right here. So that's what that is, the 188. But the when you look at the put side though, that's where we took our hit. So 22.55 strike, Friday's expiration was 22.36, so it's about 20 points. However, we did collect about, we'll just round to 5 points of premium, so it's a net loss of about 15 points. And so that's where you get the 725, because each point is $50. So so the iron condor took a loss. If we look at the this top algorithm up here is the gap short, and it did not have any trades in that week. If you look at the breakout, that's where our other loss occurred. So on the 27th, we bought the strength that the S&P saw, but then the market sold off, and we got let's see, I guess we actually exited at the close. So it didn't stop out, but it exited at the close with a loss. And that's what that other trade is, this day trade B3. And so that was a loss of 363. So put it together, it was a week that was pretty brutal, down about $2,400 per 30K traded. And I think I'll probably just leave it at that. But if you have any questions at all, feel free to call us. You can also email us and request a live demo. And we do this just again to show that we do show the good times and also the bad. This is an example of a bad week for us though, and for those of you that are curious, a lot of people ask, well, what's kind of the worst case market conditions for you guys? Well, we typically do good, and this again is based on a combination of the back tested, the walk forward, and then the live trades that we've seen. We tend to do good as a complete system when the market is moving in a direction. So whether that's up or down usually doesn't matter for us, because if it's going higher, then the bullfire will have some amazing trades, kind of like it did here in some of the previous weeks in December. If the market starts going sideways, a lot of times this swing trade ES will still have some good trades, kind of like we saw in kind of this period throughout here. But what happens is when the market does roll over, then a lot of times we will take some hits, just like we did here. So if someone were to ask the worst case for us, I'd have to say it's probably when the market has been going up, then sideways, and then starts to roll over, just like it did this week. Because what happens is we might or might not get out of the swing trade that we're in. Our targets are pretty tight, so a lot of times if you get a gap up and then a sell-off, kind of like you did here, we'll be profitable on the swing trade, even though the market closes down the week. But if we're a bit unlucky and the gap up isn't enough to hit our target and we're still in the trade and then it sells off, then yeah, we're going to get stopped out. And then we'll also take potentially some losses on the iron condor, but for that it just depends on what the volatility is and kind of when we initiate the trade. In this case, the volatility was fairly low. I believe it was around 12, and so we didn't collect a lot of premium on the iron condor position that we initiated. but then soon after the market sold off pretty hard, and so that's also kind of a hit that we took on the Iron Condor. And again, if the market has been going higher and then kind of going sideways for a week or two, a lot of times the 10-year note will not have been in a trade yet, and so so that's again our worst case scenario. So that's kind of it. I mean, it happens. I look forward to talk about kind of the future weeks, just to show how we rebound out of this, but wanted to show you the final trades of the year just for consistency, and show you that this is a good example of why everyone that's considering our systems, they should carefully consider the risk. I mean, I know the disclaimers, I think at times we just gloss over them, but no system is perfect, including ours. We do believe in the methodology. I believe that by trading 7 algorithms, each one tailored for a specific market condition, that when you overlap them all on top of each other, you have in my opinion, a market direction agnostic trading system that can do well if the market's going up, it can do well if the market's going down, and it can do well if the market's going sideways. The tricky part is if it's been going sideways and then has a big sell-off, usually that week will take a hit. And again, if the market keeps going lower, then more than likely this swing trade system algorithm will not keep triggering. It'll shut itself off and we'll get on the sideline. And the same happens with the Iron Condor, so that we don't take hits on the puts as well. But if the market stabilizes and goes higher, then the swing trade ES will keep getting in the trades, and the Iron Condor will as well. And then hopefully we'll have a few good trades on the day trading algorithms as well. So I think that summarizes it, though. I wish everybody a happy New Year in the coming New Year, and I think that's it. So also just wanted to mention that I'm doing this review to close out 2016, even though we're already into 2017. So, but I wanted for just to kind of close out the final week so that we had it in the video blogs. But I will be doing one that talks about where we're at for 2017 so far. So with that, thank you so much for watching, and look forward to talking about the new year with you guys. So have a great day. Bye-bye.